Hey everyone, this is a trader investor, and today I want to go over a technique I use to find the next GME, GameStop, the next AMC when it made its move. So in short, no pun intended, how to find the best short squeeze to put in our watch list and to monitor for trade setups. So that's why I'm starting with Finviz. Finviz is a free web app that we can use, just finviz.com, and I will put in a link to this screener in there as well. And the purpose that I will put this link is so that you can easily replicate what I'm showing today. So basically what we are looking for is the way that I like to set it up is for any company that is over 300 million in market cap. That means small cap to large cap. I don't want anything smaller. That's my preference. I like to go after some big gainers and some big market caps. You can find short squeeze in something smaller. It's just not what I recommend. I just don't find there is enough liquidity, and I don't find that there is enough conviction when the short squeeze happens. Because if we don't have the volume, if we don't have that conviction, the price is not going to shoot up where we want it to go. So that's why I like to start at least at 300 million. And then the next thing I look at is average volume. I want average volume over 500,000. Preferably over 1 million, but at least 500,000. Float short, it means out of all the outstanding shares, the percentage of shares that are short, I want this number to be greater than 30%. Greater than 30% means it's heavily shorted. So that's definitely one thing we want to do. So this is just basically it. These are the three things I have in my criteria. But then the way I narrow it down is once you run this scan, it will most likely come to the overview tab and it gives you this list. But for me, I prefer to go to the ownership tab. And the reason I go there is because I have the short ratio also showing in that tab. And here's where the short ratio comes into the picture. And here's why you see me sorted it highest to lowest on this column. Short ratio means if all the shorts decided to cover at one point in time, how many days will it take them to cover their shorts based on the average volume of that particular stock. For example, if we have 1 billion shares shorted, but the average volume for that stock is 100,000, then to even get to 1 million, it takes 10 days, right? This is just an exaggerated example, but this is how you should look at it. So maybe less exaggerated is if 1 million shares are shorted and 100,000 shares trade on an average, it takes 10 days for those shares to be exited. So that's what I want to see. I want to see this number high. I love it because that's strengths into what we are trying to achieve. And then the float short, as I said, I want it to be over 30%. So everything in this list, both these 2 pages of results that I've gotten, the 23 tickers, all have floats greater than 30%. But then where I narrow it down is I look at everything that is above 3. If something takes less than 3 days, it's not going to give us the move that we are looking for. So what a short squeeze is, for those of you who do not know, and I will do another study on this, an in-depth study, but what a short squeeze means is when shorts are forced to close their positions, which means they're buying. Any short closing a position is a buy. Whether they're closing it for a loss or closing it for a profit, a short closing a position is a buy action. So when that buy action happens and there's a lot of shorts, which in ESPR, for example, it's going to take them 12 and a half days or more to cover. If all those shorts are forced to cover, then they have to keep buying. So for 12 consecutive days, price is going to start to go up, and it's going to go up significantly. This is why I want 3 or above. Anything less than 3, price is going to go up for a couple of days, but it's not going to go up necessarily in a big way that we would like it to go. If we want to take advantage of a short squeeze, that's what we want. Shorts being squeezed, shorts being forced to liquidate their positions. That is what we are looking for. So we start small cap or greater, over 500k a day average, over 30% float, and then sort by short ratio, highest to lowest, and anything below 3 I ignore. So the first 15 is what I want to look at. And so what I do from here is you can come in here and look at the charts in here, but if you use the free version, you will not have the flexibility to interact with the charts. So what I prefer is to go back to my trading platform, and for me my favorite is TradingView, and I also use Thinkorswim. What I do then is in TradingView I have created the short squeeze watch list, and what I have done is I have just taken the top 15 based on my short ratio criteria, right? Based on short ratio criteria, I have taken the top 15, and that's all I'm interested in. So it doesn't matter which tab you're on. I'm going from tab to tab. It doesn't matter because it is sorting it by whatever columns that I've already decided to sort it by. It's already sorted. So by changing tab, it doesn't matter. I'm just going to look at those top 15, and those top 15 I have already added them in my watch list. So now that we know how to find the short squeeze, what is next? What is the next logical thing to do to find the setup? So I like to start either a daily chart or a 4-hour chart for this. Either one works. And so, going down through your list, first, let's identify what is the structure of this market. So in this case, the structure is we've been in a bearish structure that had a pullback, and now it's bearish again with consolidation. So this area for me shows an area of consolidation. So what I want to see is I want to see a break of this consolidation area and price retest that consolidation area and enter. This would be a great entry for price to at least target somewhere near the old highs. The old highs that I can see from the 40 area to the 70 and change area. This is a pretty decent move. That's what we want to target based on a structure being broken, and when the structure is broken, it is giving us an opportunity to enter. So we look at the 4-hour chart, same scenario, except we look at a smaller time frame to look at our area of consolidation. So it's the same box that we're looking for. It's the same entry that we're looking for, and as a different preference for an entry, instead of a breaking of this consolidation, we can also look at trend line breaks. But first we have to understand that this is accumulation, because we're coming from a high value. We're in a bearish market, and this is an accumulation. So I want to be certain that this accumulation is over. I'm just drawing the trend line here as an example, but for me, this zone here, I want to see this zone broken. I want to see this zone broken as an accumulation before I enter any position on this. But this is getting ready and monitoring your short squeeze on a regular basis and updating your watch list and setting alerts where necessary and being ready to take action when that happens. So we looked at one. Let's look at the next one. The next one is again setting up very bearish movement, very high short squeeze, and this on a 4-hour chart is telling us that it could reverse. So what I want to see is break of structure. Break of structure, meaning we form a new high, a new higher low, price makes a new high, we break these highs, we have a break of structure of the 4-hour chart, we can go long. If we choose to go to the 1-hour time frame for that break of structure, the 15 minutes time frame for that break of structure, they're all valid. In the short squeeze, they take time to develop, so I'm not really in a hurry to enter these positions. I am in a hurry to find them and then prepare myself for a nice entry. So if we break this trend line, which we have right here, and getting above these highs might be an area to look at if you're looking at the 15 minutes. For me, like I said, I don't want to look at the 15 minutes for these. 1 hour is the smallest time frame, but I like to look at the 4-hour for this strategy. And so look at a break of structure in the 4-hour, not just a break of the trend line. I want to see a real break of structure, even if as we've seen, we've broken this trend line. I want to see price make a new high, a new higher low, and break this area for a nice entry, and we can take it to a level as target 1. We can say, hey, somewhere between 32 and 34 is our target 1 area that I want to go after. Is there anything longer term? The 45 to 50 area is a longer term. So if my target 1 hits, I can take I will take most of my position off. In a short squeeze play, it's very, very uncommon to see a play like GameStop, GME. It's very uncommon. So usually we have a rally and we either stay up, but we don't have a complete melt up, if we want to call it that. That just keeps rising forever. That doesn't usually happen. So first target I set near the signs of first travel area, right? That first travel area being the most recent highs. I take most of my position, not even 50%, maybe 75-80% of them off here. I have tighter stops and I ride the rest. This is how I look at this plays. So let's do a couple more. This is when you're looking at a daily. This is a fairly new company. This is fairly new. So usually in a play like this, even though it's heavily shorted, I ignore it, and that's why I take it out. And I deliberately left it in here to go through this exercise so you can see what I look at. Again, one thing I want to stress out: not every play is going to work. Not every play that I don't like is not going to work. I just like to narrow down my list to something that I can manage, something that I can like. I want to be comfortable entering the position. So to be able to enter a position comfortably, I select my stocks carefully, and I'm very picky. Again, here is, as you can see, like healthcare, pharmaceuticals, very, very volatile, and especially one that hasn't been around, that hasn't been proven, I am not comfortable with. So you see, we're very easily narrowing down our list here. We're narrowing down, and our goal is to find the best ones to trade, right? Like you see here, this has been around for quite some time. This is what we want, right? And this move up here could have been a short squeeze. Is it possible that we're entering into another phase of short squeeze? Yes. And do we have a break of structure when we break this trend line? And then we break structure from here and retest these lines and go back up. This is a break of structure, and we can target the 180 area. So somewhere from the low to mid 120s to the 180 area is what I want to target for this particular play, and nothing wrong with that. And it's setting up nicely. It's giving us a heads up, hey, I have something for you to look at, and we're looking at them there. And so as we go through our list, then something that hasn't been around for a while, you can see out. It hasn't been around for a while, out. It's been a while, then I can look for break of structure, break of structure in the daily or in the 4-hour. And once we see that break of structure, in this case our break of structure is going to come when we break this and we form a higher low somewhere. I don't know where. We form a higher low, and then we break this again. Then so we come down and we break that area. This would be a nice entry from the 44s to the 58s. That's what I see as our first area of trouble, and for a foreseeable distance, that's what we see. So that's how we're going to play this one out. So this exercise is about finding where the next opportunity is, and this screener is not going to tell you one that is about to break. You have to go through this exercise. You find the short squeeze, you wait for price to trigger, you get an alert, you might say, hey, I'm going to put an alert here, and then based on that alert you take your action. So you don't have to be glued to the charts. You can just start setting alerts and prepare for them. So something like this, it's been consolidating, and there's more consolidation within consolidation. Like the bigger consolidation has a smaller consolidation. So when I see break of structure, I will start to target the 16 areas, somewhere from the 12s, based on a break of structure. Always break of structure is something you'll hear me say over and over. You want to see a strong break of structure to be able to enter a position. If you don't see that break of structure, you're not entering with high confidence. The purpose of wanting to break the structure is to have that high confidence. And in this instance, for example, a break of structure could result in us closing this gap. So somewhere from the 40s to the low, the mid to low 60s is somewhere we want to target as our target 1, and then we have this area here that we can go after for additional targets depending on how far the shorts are squeezed and they keep taking the price up. So that's again showing you every ticker has its own analysis, right? Every ticker has its own way of looking at things, and if it's brand new and you're comfortable with these brand new names, maybe you understand what the company does and you believe in that company and you believe that this bearish momentum is temporary, it is unwarranted, this company needs to go higher, by all means keep this new companies, right? Keep these new companies, but then wait for break of structure, right? When we have break of structure, retest, and we have new highs, you can definitely enter them and take them higher. So that's also important. Once you understand the concept, how to find the short squeeze, how to minimize your list, and what structure to look for, that break of structure, then you're golden. You have everything that you need to get moving on this analysis. But if it's something that is new, just be on the lookout. And like this one, very high short interest, but I don't understand this movement. It's a very sideways company for a pretty long time, right? This is pretty long time. It's a very sideways company. So when I don't understand something like this, it's out for me, right? And it's out for me, and I go to the next one, because the idea is to shorten my list to something that is manageable. And if I miss an opportunity because I am too picky, well, there's another day, another trade. The market is not closing just because I missed one trade. So, but when the trades are ready, like in this instance, when the trade is ready to take off, you want to take advantage of it. So this is why I wanted to show you how to find short squeeze. So to find short squeeze, we go to finviz.com. I'll put a link to the screener that I use to this specific criteria, or you can pause this video and just go to finviz.com and set up your own criteria, and then you can just save them. You can come in here and save screener. So there's plenty you can do in here. So this is a great resource, and I want you to take advantage of this resource. And once you do that, you put your list together, you analyze your list, you make your list even shorter, and then wait for a trigger to enter. Very simple process. If you have any questions, please leave a comment below, and I will address all of your questions. I want to help you be as successful as possible with finding the next GME for you. So as always, don't forget to like this video. Tell me you are happy with what I'm doing to teach you, to educate you on various strategies and ways to look at the market. Keep encouraging me, and so smash that like button, and I will see you in the next video. Take care.